Hey everybody, welcome back to another weekly market update. I'm your host, Mark Yegge, and the stock market is crazy right now. We had been in a nice little bull market that was starting here at the beginning of the year. Basically, January 9th is kind of when it started going. So for about 2 months, we've been on a kind of a nice little uptrend. Everything was going good. And then Jerome Powell said, I think I want to wreck the economy a little bit more and bring inflation down. So that doesn't make any sense to me. I don't know, maybe it makes sense to you. If it does, comment below. But like, hey, I want to kill the economy, put people out of work, and destroy people's lives so that we can get inflation down, when he's the one that caused it in the first place. So I don't get it. Like, to me, it's like bizarre world everywhere you turn anyway. But anyway, the market is red. So be very, very, very careful. And let's go into some of the stuff that we've covered on our mastermind call today. Can't get into all of it with you, but I will start by telling you that the market is red. We got four red lights, which shows us that it's not the time to be a hero and try to pick the bottom. This market is trending lower right now, and you have to respect that. The NASDAQ is down, testing its 50-day and its 200-day moving average. That 50-day line is the red line. We like things to be above it, which it's been for quite a while here over the last several weeks. And now it's testing it. It's testing below the 200, which is really bad. We don't want it to ever get below the 200, but it's been like that for the last year as we've been in a bear market. Are we going back into another bear market? Who knows? But it's testing those levels, and we don't love that right now. But you look at the S&P 500, and I drew this trend line. If you're looking at this on a video, you can see that I have a trend line basically touching a lot of points, and it broke that trend line yesterday on big volume. A couple of banks are failing. Silvergate Bank and Silicon Valley Bank have been shut down or are shutting down right now. This reminds me a lot of 2008, when we had a banking crisis and a bunch of banks went under, and it caused all this, basically the great financial crisis of that period of time. And we had a recession for a long time. Yeah, this feels like that. I don't know why, but it feels like that. And maybe this banking thing is the beginning. But anyway, that S&P 500 is the mark that I want to show you there, and it's broken below it. So look out below, because I think it wants to go test that 3764. If it breaks through that on some volume, I think it's going to 3491 on the S&P. Look out. The Dow Jones, which has been for months one of our strongest indexes, is now back testing the 200-day moving average. That's not healthy. It's below the 200 right now. The New York Stock Exchange, the same thing. So all the markets are showing you that there's weakness. You got to respect it. There's a sell-off going on. There's a lot more sellers than buyers. Those buyers aren't strong enough to hold back all the sellers. So that's why you see the momentum to the downside. And look at the volatility. Volatility is way up, and you rarely see spikes up like this unless there's going to be a trending spike up like this. So the market's spooked, the market's scared. That's why they're selling, and it's showing up in the volatility index. It's pretty rough. Apple is one of the strongest stocks out there right now, at least in the big ones that we follow. It wants to go back and test that 200-day moving average, but it's probably going to hold up, because Apple does what it does, and it continues to increase revenues and do the things that Apple does. So right now it's looking pretty strong, at least for our purposes. We call the cash flow machine, where we basically do a covered call strategy against the assets that we own, and Apple is one of the ones that a lot of people in our system own, and it's been a really good stock for a couple of years for them. Last one I'll talk about is Tesla. Tesla had a little bit of a sell-off here in the last couple of weeks, where it's gone from about 217 to about 170. And that's been a healthy sell-off, but it's a natural sell-off. I mean, this stock went from 101 to 217, lickety split. And now some of those sellers are spooked out of it and getting taken out with this market. But Tesla, to me, that's an orderly sell-off on fairly light volume. I'm not too worried about it. I think it's going to bounce off its 50-day moving average. And if we can get any strength in the market, it will stay above that 50-day moving average. I'm not Nostradamus. I don't know which way the market's going to go. I could just tell you the probabilities right now are to the downside. So you got to respect that and play it that way. In any case, I hope you have a fantastic week. I hope that's helpful. Listen, if you're going to be in the market, I want you to be really defensive out there, because this is a rough time to be in the market. You're going to be whipsawed all over the place by some people that have a lot more money than you and I have, right? These big money managers and market makers, they're going to move the money around really quickly, and they're going to try to take you out of your stock. that might be a good thing in the short term because maybe the stock market's going to go down a lot more. So you just got to be safe. All I'm trying to do is implore you to play defense. If you got to sell calls against things, you want to buy puts, if you want to be in cash, just play some defense. This is not the time to be a hero and try to pick the bottoms and make a bunch of money. You want to save a bunch of money. Sometimes that's the best thing to do. If you follow sports, you know that defense wins championships. And so I want you to play defense right now and be really careful. In any case, thanks for being here. I look forward to seeing you on another edition of the Weekly Market Update. Until then, have a great week and I'll see you next time. Bye.